Hello, and welcome to another update video about the DXY. Yeah, again, another DXY update. It makes sense because we're at a critical point up there. Today, the DXY has been a little bit in the red, okay? A few red candles, still in this ascending price channel, but I think we might have formed the top with the last swing low. Not entirely clear yet. I cannot confirm it yet, and I can really only confirm it once we break below this $104.68 level. However, a break below the ascending trend line here could indicate really that we have topped. And we're watching for it anyway. As I said to you in the last few videos, we have a flat structure here to the upside most likely. An A, B, C structure with the next move down being the C wave. Now in an alternative scenario, this could be a wave 1 to the downside. The move up could be a wave 2. With the wave 3 to the downside and something even more bearish. However, that first of all, that's not a question to answer here right now because we won't know. And also considering the context, and I showed you the larger time frame wave count for the DXY yesterday, looking at the larger context, this here is the more likely option. Besides, if this here was a wave 2 instead of a B wave, a flat structure in a wave 2 is, while it's not too uncommon, you normally see a so-called sharp correction in a wave 2. And the sharp correction is not a flat. It would look different. So what we see here, this flat structure where we had an A wave rally, an overshooting B wave to the downside and a C wave, so-called expanded flat, is more common in a wave 4 or even a B wave. Yeah, in a wave 2, you don't find it that often. And therefore, yeah, I prefer this scenario. But again, it doesn't matter at all in the... It won't matter in the next few months anyway, because those would be mirror counts. They would move down together. So as soon as we have a top in place here, the DXY should move down into the low $90 region. Now that could obviously give, for example, the S&P a boost. Yeah, I don't like the correlation thing. Yeah, each chart on its own, but still we have major markets currently at key turning points, at key decision points. So yeah, for example, the S&P 500 as I said, could have bottomed today. I do analyze it on a daily basis in our stocks and S&P 500 service. You can find the link in the description if you're interested. Every day I update the S&P with the video update as well, plus selected stocks on the day. So that can be very helpful, especially in the current market conditions. But yeah, I mean, what I want to emphasize here is that also the DXY, as well as the S&P 500, cryptos as well, gold and silver, they are all at key decision points. Really, really interesting time in the market now after we've had really, really boring sideways action here really for a long time. And the market has worked through a long correction. The DXY as well, yeah, you might call that a rally. Well, it is, but it's within a large correction. That's at least my interpretation, a B wave, yeah. So we have 5 waves up. It's a pretty full wave count to the upside anyway. And even though this week was generally still up here until Wednesday, yeah, where we started the decline, today's strong drop is quite noteworthy. But I have to say we have not broken the trend line. I mean, it's something similar to what happened here, yeah. We have not broken the trend line, but if next week starts and we keep dropping below the trend line, then we will have dropped below that trend line for the first time, well, since it started in July, which is quite noteworthy. And then this last swing low, which is a wave 4 low, will be quite significant because then further upside in this particular structure will be invalidated. And I will be watching for impulses to the downside as soon as we break below that level. Yeah. Then the next support will be $103. That's also a key level. Yeah, and then I think we are in free fall. And I can give you just an idea. Let me think. Yeah, I can give you an idea where that wave 1 of yellow wave C might land. Just a rough idea, okay? We might see it go into the region between $102.15 and $99. The very first level to watch is $102.15. Yeah. From a Fibonacci extension point of view, a very common target, 38.2 extension in a wave 1 of wave C. But again, it could also go to the 61.8. It's one of these, ideally. Looking at the overall context and the overall proportions, I would say it's probably rather this one. Important is it should ideally not go beyond the $99 level without a wave 2 corrective rally. But I don't think it will do, so we'll see. But yeah, that should prepare you for everything. Just again, can't emphasize enough how critical this resistance area is. Obviously, this is the area where we would expect a rejection, and I think we're very close. And if the market comes down here, if the DXY comes down, I mean, we talk here about a drop of around, we talk about into the low $90 region, so 12%, it's quite substantial for the DXY. Remember, it started dropping already here in September 22. So overall, we talk about a significant decline over that period. This here is simply seen as a corrective rally within an overall downturn. That's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. You can also check out our stocks and shares service, which is a separate one, link in the description. It's a very professional one, very regular updates. Takes you to Patreon, and then you can select the tier that you like. You can see all the stocks that are covered. Nike, we've got Boeing, we've got Palantir, we've got various stocks, Target, Costco. Yeah, several ones. Take a look at it if you're interested. And if not, have a great weekend, and it would still be great if you can leave a like and subscribe. Thanks a lot for watching. Bye-bye.